My name is Jared Scarf. I'm the CEO of Desert Gold Ventures. We're a gold exploration and development company with a flagship project in Western Mali in the Tier 1 mining district of the Kenieba Inlier, which is an offshoot of the Birimian Greenstone Belt. I'll get into that in a bit more detail, but I'll start with a bit of an executive summary about the company. Our flagship project is 440 square kilometers of contiguous property over the most prestigious gold belt in West Africa. We are adjacent to a lot of big players. Allied Gold borders us to the north. Endeavour Mining borders us to the southwest. And then further south along the belt, along the same trend, we've got Barrick's Loulo-Gounkoto mine complex, as well as B2 Gold's Fekola mine. So a big land package in the right area. Myself and our technical staff have been active in Africa for well over a decade, made a number of discoveries, had significant successes there. At the current state of the project, we've got a little over 1.1 million ounces of resource that comes from 5 different pits that are all located within a short proximity to one another. All the zones are open, as we say in the business, to depth along strike. It's a virtual certainty that they'll get bigger. But in addition to the existing gold resources, there are over 25 gold zones on the property confirmed by drilling that have yet to contribute towards the existing resource base of the company. So it's a virtual certainty, a very high likelihood that this resource base is going to get significantly bigger. In addition to the exploration initiatives that are ongoing, and we put out a press release last week on some exploration we did earlier in the season, we are also in the middle of completing a preliminary economic assessment on a small mining opportunity. And we're envisioning between 1,000 to 1,500 ton per day operation. So, around 400,000 tons per annum of oxide gold that exists on the property. Targeted annual production in the first phase would be roughly 20,000 ounces per year. And we're looking to do this through gravity, low-cost mining. The PEA right now is about 80% complete. Everything's looking very good. And we're hoping to put some guidance out shortly in terms of what the economics of that situation might look like. And I'll discuss that in a bit more detail. But high level, the company's objective is to breach that sort of 2 million ounce threshold from a resource perspective, fast track into mining, especially targeting these at surface oxide zones, free digging. It's low cost mining. It's quick to get into production. And based on what we're seeing in the initial initial outcome of this economic study, it looks like it's going to be a good situation. And the idea would be to reinvest the cash from the mining initiatives to reinvest it into exploration regionally on our project to minimize shareholder dilution and amongst other initiatives that we might undertake. As well, we're looking at evaluating some other projects in the region, but outside of the jurisdiction specifically of the country of Mali. There are a number of interesting opportunities, and hopefully I'll have some guidance regarding that before the end of the calendar year. And I'm pretty excited about some of those initiatives as well. A little bit about the corporate aspect of the company. Our main listing is on the TSX Venture. We also have listings on the OTCQB, as well as a listing in Frankfurt. We've got 224 million issued outstanding, 291 fully diluted. There's a schedule here of the warrants that you can see breakdown here. We've got a few expiring in the next couple of weeks at 25 cents. Major shareholders, the board of management are significant shareholders. Merck Investment, a fund out of the US, headed by a German investor by the name of Axel Merck, owns a good chunk of the company. Grand Peak, a investment holding company associated with our chairman, also owns a good chunk. Retail broker Lees Jones Gable, a household name in the mining business you might know, Ross Beatty, chairman of Pan American Silver, and some other holding companies, Elemental, Altus Royalties as well. So myself, Jared Scarf, I got involved with the company in 2011 as a director. The company at the time had a 50% interest in an exploration project in Nevada. And we started looking further afield for better opportunities, geologically speaking. And that's how we wound up in West Africa, because the opportunity was obvious. And so I came on full-time as CEO in 2015. And the idea was to really expand our footprint as much as possible, and to tie up as much prospective ground in this belt as we could. And I think we've done a very successful job of doing that. Don Dudek, he's our senior technical director. He's on our board. He's been very active and very successful in this belt for the better part of 15 years. He had some successes at Tabakoto with Avian Gold, where he was the VPX. They were bought by Endeavor in 2012, I believe, for 460 million. He then went on to lead the feasibility study for the Houndé project in Burkina Faso for Endeavor. And when he finished with that, he started a company called Savory, which was also West Africa gold exploration company. They were bought by Semafo, and then Semafo was bought by Endeavor. And then he started working closely with us. So some very good technical people on the ground for our company. A little bit about Mali. Mali's either the third or fourth largest gold producing country on the continent. We'll see when new numbers come out for 2023, 2024. And they've got basically two major belts in the country. You've got Western Mali along the Senegal-Mali Shear Zone, which is the main gold belt. And then there's a secondary belt in the south where you've got some other companies operating as well. And really, this picture is, it gives you everything you need to know about why we are where we are. So this is the Senegal-Mali Shear Zone, the Kenyeba window. And there are two major structures or faults that control all the major gold deposits in the belt. And starting from the north, moving down, this belt we've highlighted in this gold band is the Senegal-Mali Shear Zone. And, we've highlighted for you where the material deposits are and where the operating mines are. So you've got Allied Gold to the north of us with the Yatela Sadiola mine. All told, current resources historical production, it's well over 15 million ounces. Going south, you've got our 440 square Senegal-Mali Shear Zone project. We've got 38 kilometers of strike, exposure to the shear. And then the secondary feature called the main transcurrent. We've got about 11 kilometers of exposure to that. And then we've got a whole bunch of really interesting exploration ground in the middle. A lot going on geologically speaking. Going further south along the belt, like I mentioned earlier, you encounter Barrick's Loulo-Gounkoto complex of mines, well over 15 million ounces, 700,000 ounces of annual production from, a half a dozen open pits, hugely profitable, a dream mine, so to speak. Further south along the belt, you've got B2 Gold's flagship deposit, their Fekola mine. Combined resources, it's over 7 million ounces. It's still open. They're still exploring. And their annual production, I think this year will be on the lower end of guidance of maybe a little under 600,000 ounces. But they should be expanding significantly, maybe adding another 50 to 100,000 ounces from this camp by next year. And then finally, at the south of the belt, as you dip into the Guinean border, you've got Manigen's Boto Diaka sister deposits. They total a little over 3 million ounces. They're not yet in production. And then the secondary feature, the main transcurrent, this is about a 10 million ounce camp. This was previously Teranga. until Endeavor bought them in a $1 billion plus transaction. And there are 3 operating mines there: Sabodala, Gora Masawa. And you can see I've marked that the shear here, and the splay of the shear dips into our property. And finally, at the southern end of the belt, you've got Resolute's Mako mine. So this is a very active camp. There's a lot of infrastructure. There's a lot of good resources available. And there's a lot of gold. And as a result of that, I won't go through this in excruciating detail, but there's been a lot of M&A activity in this area as a result of all the discoveries that have been made, the low cost nature of the mining here, and how profitable a lot of these mines are. And there's been some, 7 and 8 figure transactions that have happened over the last 10, 12 years, and that kind of highlights them. Drilling down into a little bit more detail regarding our project, this is a plan view of the 440 square kilometer Senegal Mali Shear Zone project. Like I said, we've got a little over 1 million ounces of resource coming from 5 pit-constrained deposits. They're highlighted here with the gold stars. And the black stars you see are where we have economic drill intercepts from exploration work that we've done that's also ongoing. And so, this image, high level, is really meant to show you the prolific nature of of gold occurrences in this part of the world. And the white and black boxes are highlighted drill intercepts presented in terms of grade over width. And, really what this is showing is that there's economic gold. We're discovering economic gold intercepts all over the property package. And the real question is, how do we tie it all together? And how do we create a viable, large-scale economic proposition from a mining perspective? Where we're going to start the small-scale mining that I touched on earlier is in this area, the central part of the property called Barani East. There's a little over 200,000 ounces of resource at Barani East, but the interesting part about it is there's 80,000 ounces of at-surface open pit oxide, and the grades are running nearly 2.5 grams. And the oxide represents a low-hanging fruit opportunity to quickly start generating cash flow for the company. And as such, this rectangular block here, it's hard to see, but the Senegal Mali Shear Zone project is comprised of 10 licenses. And 9 of them are research and exploration licenses. And 1 of them is a small scale mining license, fully licensed, ready to go, environmentally permitted and everything. And that encompasses this rectangle here, including the Barani East deposit. So assuming the outcome of the PEA is positive, which at this point I'm gaining more and more confidence to say that it will be, you're talking about something that could take 3 months to put into production. We don't have final numbers on the CapEx or the overall construction cost, but something in the vicinity of US 10 million is looking realistic for the first phase. And there are all kinds of specialty groups out there that can finance these types of things through certain types of debt instruments, gold loans, etc. And so I think there's a very realistic opportunity that we can fast track this portion of the project into production in 2025, and that will feed the rest of the project to develop these other assets. The feasibility study also is going to encompass 2 deposits that are within 500 meters of one another. They're essentially the same system. It's called Gourbassi West and Gourbassi West North. And there's a little over 100,000 ounces of oxide there, another 300,000 ounces of resource in the primary. And so the distance as the crow flies here is about 20 kilometers. So there will be initial processing here. The mining will start here. We'll get this thing licensed under a small scale mine as well. And then we'll either truck the ore partially processed to the facility at Barani East, or we will in fact move the facility over to Gourbassi West North and start mining there. We're working out the details of what's the most economically viable option there. But high level, I think this property has a lot more to give. And it's about what is the most efficient way to explore a regional project, to minimize dilution for shareholders, and to use the cash flow generated by the oxide deposits as creatively and efficiently as possible. This is a high-level overview of the resource broken down by category in terms of inferred and measured indicated, and also by zone. And I won't go through it in excruciating detail, but it's there for you, to look at on your own leisure. This is just a little bit about our approach to exploring a regional target. And really, it's a merit-based system where we see the best opportunity based on results from testing targets. And as you can see, we start with baseline evaluation, essentially superficial exploration, until we develop a first order drill target, and then we test that target. And so we've got so many of these targets that we have to be efficient in terms of how we allocate our resources. And the geological model's working. We're fairly confident we know where the hotspots are on this property, but with such a big land package in this part of the world, you can always get big surprises. And sometimes you have to reallocate your priorities in the event that you find something surprising. So we've got a little over 20,000 meters of drilling planned for purely exploration. We completed about 3,500 meters of exploration drilling this season. It was all good. It confirmed a lot of what we were hoping to find. I would say it was accretive to our model, but obviously, we need to do a lot more work. We were also able to complete all the metallurgical drilling and the geotechnical drilling for the small scale mine. That was completed some months ago. And where we're at with the PEA right now is we're getting all the detailed metallurgical and processing data in so that we know what the final design of the mine will look like. And I'm hopeful that we will have a finished and final product ready to be financed by early 2025, hopefully in January. So that's what we're targeting. The objective is to build that mine in the first half of 2025 and to be producing gold, as soon as possible and generating cash flow. So it's a fairly simple story. Big regional land package in one of the best gold belts in the world. There's excellent opportunity for near-term cash flow to the tune of maybe 20,000 ounces a year with an initial mine life of maybe 5 to 6 years. And a significant portion of that being recovered simply by gravity, which will be a low cost. But all the while not ignoring the big picture, which is going after these larger targets where we're looking for a multi-million ounce sort of tier one mining scenario. So those are the two strategies we're really running in parallel. And I'm happy to take any questions or any comments that anybody might have.
Yes, great presentation. Everyone is welcome to post questions in the chat. So what are the milestones that investors can look forward to as you advance these projects towards production?
Yeah, so certainly one of the next major milestones will be the publication of the PEA, like I said, in early 2025. That will lay out in detail the economics of the project and the steps towards going into production in a timeline and so on. I think the other major milestone will be securing the funding to initiate the construction. And then at that point, it really becomes about execution. But, this isn't a big footprint operation we're talking about. It might take up an acre sort of thing, if you to picture in your mind what it might look like. And the equipment would be shipped via rail from South Africa and then essentially built and constructed. So this isn't going to be a huge operation, but if you think about it in the context of a small company like Desert Gold, 20,000 ounces a year at the current gold price would have a significant impact, right? Especially our market capitalization is, 18, 20 million Canadian. So, the NAV of the project and what it could potentially do for the company has potentially a very outsized impact on the current, present where the company is at right now.
And given your expertise in navigating Mali's regulatory landscape, what steps are you taking to streamline the permitting process to ensure project timeliness stay on track?
Right. So, as I mentioned briefly earlier, this mining license is comprised, or this project is comprised of 10 licenses. This rectangular block here, if you can see my cursor, is a fully permitted small-scale mining license. We could be producing gold on it yesterday, fully legally. So we have no regulatory hurdles to overcome at all. At this point, it's just about execution. In terms of permitting the secondary mining phase here at Gurbassi West North in the lower left, well, we've got 5 years to figure that out because the initial life of mine at Barani East will probably be around 5 years. And it's worth noting, this project, there's a secondary component of this project that goes into a lot more geological detail for anyone who's interested, but I'm more than going to touch on it today. But where are we here? Oh, here we go. This is a more zoomed in view of the Barani East small scale mining license. And the starter pit will be in this central area here. But what you can see all around you are oxide targets all over the place. Everywhere where you see a purple triangle is an Auger anomaly of economic gold. And you can see a lot of these proposed drill holes, excuse me, some of which were completed this year. And so Don, myself, our VP exploration in Mali, former Barrick Gold, a fellow by the name of Sheikh Ousmane Diallo, we all believe with a fairly high level of conviction that with more drilling in this area, we will continue to extend the life of mine and we'll add on more oxide gold. So we could end up staying in this area for 10 plus years once we get going. So, that's a long-winded way of saying we don't have any regulatory hurdles to overcome at this point. And when we want to get this area permitted under a small-scale mine, I think we'll have plenty of advanced time to do that.
As you work on the preliminary economic assessments for the key deposits, maybe can you touch again on what are early indicators suggest the strong economic potential?
It's a great question. So with something of this scale, which would, let's say, be on the smaller size, there are a couple of really key inputs or components that'll make a mine work. One of them is grade, which we have at the starter pit at nearly 2.5 grams, open pit, free digging oxide. And the other lies in sort of the rock characteristics, the metallurgy. And really, a lot of the energy and focus of the PEA surrounds that, the nuance, the detail of, how much energy goes into processing the ore, how much of the gold is actually recoverable from gravity and leachable to get sort of final recoveries. And then the other component, which is sort of outside of your control, is the gold price. And, the gold price is more than enough. When we started looking at this as a viable option, gold was $1,800. And when we did our internal desktop study, it looked good at those prices. But there are a lot of assumptions baked into an internal desktop study. And until you do the detailed metallurgy, you don't really know. And so that's where we're let's call it 90% of the way done, completed the metallurgy. And everything looks good. And, we might even be able to provide the market with some guidance before we even publish the PEA and regarding specifically that. So I don't know if that answers your question, but those are the major inputs. Is you need good grade, you need good metallurgy so you can actually recover the gold, and then from there it's all about managing costs.
So, and can you touch on what partnerships or collaborations you're pursuing to amplify your market presence?
Well, we're working with Emittenten, IIF. We really like to attend. There's, a half a dozen key conferences we like to attend every year. In fact, the Indaba in South Africa is coming up at the end of January. That's a big one for us. So that's kind of how we've been maintaining a presence or trying to expand our presence.
Okay. So with about 2 minutes left, maybe you can wrap up the investment case. Basically, end it with a short elevator pitch. Why should investors invest now? And especially with upcoming finance rounds, why should they join?
Yeah, I think it's if you look at the valuation from an ounce in the ground perspective, there's a huge delta between, what we're valued at currently and what the spot price of gold is. And when we go into production and start pulling gold out of the ground, that delta is eliminated almost entirely. And we also become a self-sustaining entity and not, a going concern. And then I think as we ramp up the resource base and build up more scale, we also become in play for the bigger parties out there from an M&A perspective. So I think it's a compelling valuation. There's a pathway to cash flow and being able to self-sustain the company without any more dilution needed. So I think it's a good time. There's some big milestones coming.
Jared, thank you very much. That sounds like a very interesting case.
Oh, you're very welcome. Thank you for having me.